How can the end of QE in the United States impact the global sentiment? And what Asian Pacific countries will take the lead? These questions are the main focus of today's Dukascopy Bank Sentiment Index. Dr. Tomislav Ladika, University of Amsterdam, provides his comments on the key findings. Professor, prior to addressing the first question, let us observe the results. Experts became less optimistic about the North American region as both the 6-month and 3-year expectations slightly worsened. The 6-month outlook declined to 0.68, while the 3-year sentiment fell to 0.69, which is October 2012 low. Professor, considering that Janet Yellen announced in March the Fed is likely to end its unprecedented bond buying program this autumn and could begin gradually raising interest rates 6 months later, what effect do you see this long-anticipated event having on the sentiment of North America and the global outlook?
I think what you see in the numbers is basically somewhat of a disappointment that the U.S. economy hasn't really taken off as much as people expected. The announcement that the Fed was going to reduce quantitative easing and close off the program, that was highly anticipated. But people expected that concurrent with the ending of QE, you would see the economy really begin to take off. That was the reason why QE was going to end, after all. And instead, what we've seen in the past few months is stable but softer economic performance. The job numbers are down a little bit from earlier in the fall. Not terrible, but there's no sign, I see at least, that the U.S. economy is lifting off. So I think the disappointment comes from some people still hoping that we would see more robust growth, and kind of time and time again, the U.S. economy remaining in this stable 2% growth, but not really taking off further than that.
Next up is the business cycle of the Asia-Pacific economy that is forecasted to grow both in the short and long term by the vast majority of experts. Apparently, the Asia-Pacific region's economy has been growing at the fastest pace. However, it is anticipated that China's growth rate will slow going on forward. Thus, Professor, who to your mind will take the lead in the foreseeable future? Such developed countries as New Zealand, Australia, and Japan, or emerging economies including China and India?
My view on the Asia-Pacific region actually is that it's close to the business peak instead of the expansion phase. Now, growth rates will remain higher than in the US and Europe. I noticed in the sentiment index, people predicting growth rates of 3.5 to 4.2%. And I think that those numbers reflect the fact that the region will continue growing faster than the Western world. But I think that growth will slow down in many of the countries throughout the region. As you mentioned, China is, the government itself has signaled that they expect growth to decrease. I think most experts fall either in the realm of thinking that the economy will slow down or that it will actually crash. So nobody really expects China to grow faster than or even as fast as it has in the past few years. But as I look across Asia, I don't see many countries that are really going to grow much significantly faster than they have. Japan's reforms, for example, the Abenomics, that reform effort has seemed to slow off quite a bit. The economy is not growing very fast in Japan. The structural reforms that people expected would need to take place aren't really happening there. So I don't think that you'll see that much higher growth in Japan than in the past couple of years. And other countries are just very highly tied to China's economy. For example, Australia is a very mineral, resource-rich country. If China's construction boom slows down, that's going to affect Australia as well. And because China is the biggest player in that whole region, every country is going to be affected. So I think from my personal take, I think it's at a business peak. I think you'll see growth remain high, but I don't expect the region to grow faster than it has been in the past few years.
And before wrapping up, If we take a look at the 3-year Economic Sentiment Index graph, we can see that it is projected that the economies in all regions will slow down and might even reach its current levels. Professor, what are the odds that we might face another economic crisis 3 years from now?
Basically, it's all about China. The future, the next 3 years, if there is a crisis in the next 3 years, I think it will be emanating from China. There's a lot of people who are worried about the economic situation there. The government itself has said that growth will slow down, but many experts are predicting a hard landing. When you look at the property prices in China, for example, the amount of debt, their wealth management products people are very scared about the potential risks involved with these and the fact that they're hiding a lot of debt. In fact, The Economist recently published an article basically asking whether there's a pessimism bubble in China, that so many people now think that the economy is due for a hard landing. So I think the key for the global economy in the next 3 years is really what happens in China, and whether the government is able to bring in the reforms that keep growth robust going forward, or whether the current problems will lead to an economic crisis. If you look at the other regions of the world, I think the US is quite stable. I think what we're seeing right now, that approximately 2% growth, is what we're going to continue to see going forward for the next few years. So I don't think the US will be the source of a double dip crisis. I think Europe's situation has vastly improved from the depths of the Eurozone crisis, but Europe is also a long way from having strong economic growth. Having said that, China is a big part of the global economy. What happens in China is going to affect the rest of the world, and that's really the region of the world where I think there's the most volatility and the most risk right now for the global economy.
These were the major findings we wanted to share today. Thank you, Professor Ladika, for your contribution. Now, more information on the Sentiment Index can be found online by going to Dukascopy.com and clicking on Sentiment Index under the Market Research section. That is all for now. Stay tuned to Dukascopy TV.